Andrew, let me start with you first on the politics. Is it looking ever more likely that this Iran nuclear deal is going to be dead by the end of the week?
It would look that way, and I say that based on two reasons. One is Trump's track record. You know, he's made threats about NAFTA, and here we are renegotiating the NAFTA accord, and he made threats on climate. And while they haven't fully pulled out, they refused to renew the pledge at the last G7. And so I think you need to take him at his word. I think that investors are doing that, and that's being priced in somewhat in markets. But more importantly, if you look at the flurry of activity that's taken place, we had Macron go over to D.C., we had Merkel go, we had Boris Johnson. You flicked at him kind of in your opening. I mean, they are clearly trying to kind of bring this back from the precipice. And again, if you look at what Trump's done in the past, it would seem to me that the consensus view at this point is that he will pull out of the deal in coming days.
So, Dan, it looks like the geopolitical risk premium is playing into the oil markets then. Is this largely about uncertainty about where the supply will come from to fill in for Iran if this deal is dead in the water?
Absolutely, Naila. You looked at a big fundamental shift in the market over the last years. These OPEC production cuts have gone on. Stockpiles have plummeted. We're down now somewhat higher levels than back when oil was $100, but much lower than the big glut. And you have OPEC sticking to its guns on the cuts. You have Venezuela falling apart. And now you have this risk over Iran. And so people are really needing to raise the price to incentivize more production.